Hi everyone, and welcome to this segment of the Miami Real Estate Whiteboard. Today I'm taking a look at what I think is a very exciting sector here in Miami, and that would be the hotel industry. So I'm going to start with the general macro overview, and then I'm going to get into where I think opportunities are today. So you guys know I always like to say it's important to look at data going as far back as you can so you can see where the market's been and where it's going. And luckily I've been able to get hotel data on occupancy, RevPAR, and average room rate going all the way back to 1987. I looked at that and I thought, wow, 1987, that was before Airbnb, before the internet. You had to make phone calls to book a trip. It was a different world. I feel like we need a BC, like a before internet BI designation. Anyways, let's take a look at the data. So here is the general chart of Miami hotel metrics going back to 1987. This is across all submarkets in Miami. The green is charting the average room rate, and the green is charting RevPAR, and the blue is charting the average room rate. So what's immediately apparent before we get into any details on this chart is that it's a steady uptick. Of course, there were little blips. There was a blip here in 2008 in the general real estate market crash. And then there was a little blip here in 2016 where, of course, we had Zika and travel advisories warning against traveling to Miami. But the chart has been a steady up going all the way back to 1987. This is in big contrast to what we see in the condo market, where there's a great deal of volatility and where, in fact, the current citywide average and median prices, sale prices, have not exceeded old highs. And actually, if you look at my second quarter report, transaction volume for condos citywide is just about at here, 2010 levels. So that market has exhibited a great deal of volatility that we're really not seeing here. This is a very resilient, strong market with steady growth. One thing to keep in mind when looking at this chart is that during this period of growth across all key metrics, there was a great deal of inventory introduced to the market. So the market not only absorbed that inventory, but actually improved across all those metrics at the same time. And also, speaking of the Zika dip was remarkably not that big given how dire the warnings were and how widespread these travel advisories were. I mean, the market reached highs in 2015 on all metrics. In 2015, occupancy was 78%, and then it dipped about 3% to 75.9% in 2016. Similarly, average room rate citywide dipped 3% to 190 off of the 195 high in 2015. So really, given the severity of the Zika warnings, this really wasn't that bad. And we just got numbers in for 2017, July and August, so the entire summer is now on the books, and all metrics were up. I mean, look at this. Miami Beach was up 8.1%, RevPAR was up 8.1%, and occupancy was up 4.3% over August of last year. So the city has, this summer, bounced back from last summer, which had a little bit of a downturn from Zika. So, I mean, looking at this big picture here, I think that it's fair to say that the hotel space has exhibited strength and growth over a good period of time, and the volatility factor here is not nearly as great as the condo space. Not to sound too alarmist on the condo space, but I do feel that one needs to embrace volatility here when discussing the condo market and really be aware where one is in the cycle. We're not seeing that same type of pattern here in the hotel space. We're seeing a sustained period of growth with little dips that the market recovers from and then goes on to reach new highs.